This mortgage fraud has to stop. And I want to take an opportunity this week and go over the situation that popped up in London, Ontario just last week, and what the problems are and how we can fix these problems. I mean, they're pretty simple ways to fix these problems. The question is, do they actually want to fix them? And this week I want to go in depth, talk a little bit about those situations and sort of give our opinions on how we as brokers can address it, how consumers can be more prepared, and more importantly, what the regulatory body really should be doing to crack down on this. So we welcome you back to the channel. It is Friday, Finance Fridays, and I'm your host, Anthony, with InTouch Mortgage Solutions. Welcome you back to the channel. If you haven't subscribed, go ahead, hit that subscribe button, hit that notification bell, as well as don't forget to leave your thoughts, questions, and comments in the comment section below. Let us know your thoughts on this mortgage fraud situation. Now, ultimately what ended up happening in a nutshell, what I'll do is I'll put the link to the description, the article in the description box below, and you can go ahead and read it for yourself. But ultimately what ended up happening was a major broker in London, obviously one that's been in business for quite some time, was caught basically committing fraud, being dishonest, and lying on applications. So this is the first problem. So obviously there's different types of fraud that happen in the industry. We know the most common is generally the income fraud, documentation changes, and where you're lying and falsifying the income in order to get approved for a mortgage. This particular case is a little bit less sophisticated. It's more of a down payment fraud where you're lying on the application about the source of the down payment or where those funds are coming from and if they actually have to be repaid. And what ended up happening was, in most cases, when you get a mortgage, you have what's called a first position or first charge on the mortgage. You're working with your major banks. And in those particular documents, there is a very specific clause that is right there. It says no secondary financing permitted. That means you're not allowed to take on a second mortgage. You're not allowed to borrow the funds. Now, there are certain products that will allow you to borrow money in order to get approved for the mortgage. However, there's very stringent guidelines, and that money, that loan that you're taking out or the borrowed funds that you're incorporating have to be included in your debt servicing ratio. So you have to be able to qualify for the mortgage. What ended up happening in this particular case is that they were sort of circumnavigating that by providing a first and a second mortgage through the brokerage house. So ultimately the broker was basically administering the first mortgage and arranging the second. And I mean, that's bad enough as in of itself, because you're really telling a client, hey, you can buy a house with pretty much almost nothing down or very limited amount of resources down, but here are your payments. Can you afford it? Like, I mean, this is the $1 million question. What type of risk are you putting those clients into? And ultimately, you're all involved. There's no deniability about that. And this is where it gets a little more interesting, because what ends up happening is, let's say the parents of the clients that are buying the home or someone in the relative of the family doesn't have the money to gift the buyers, right? The people that are buying the home, they need the down payment. And in Canada, you can actually either use your savings, your personal funds that you've accumulated over the years, or you can have a gifted portion or all the funds gifted for a primary residence. You can actually get your parents to give you all the money. That's fine, right? Ultimately, in that gift letter, you complete that gift letter according to the bank's guidelines. And within that letter, it says that the funds do not need to be repaid, right? That's the crux of the problem, right? Those funds do not need to be repaid. So what's happening here is the parents don't have the money to give their kids. So the broker is arranging for the parents to get this money for the down payment in these cases that FSRA, which is the financial regulatory body here in Ontario, which I do have to commend. They have done a good job to crack down on it, but I think there's always room for improvement. Ultimately, basically, they're borrowing this money. Now, what happens is they close the mortgage. After they close the mortgage, they go in and they register the second mortgage against the property, and then they go back and they pay the parents the down payment, the money that was originally gifted to the clients. And that's where the fraud happens, because it's being dishonest. You're lying on the application, and banks do not like it. FSRA definitely does not like it. I mean, this is ultimately a bigger problem. Now, you might ask yourself saying, oh, well, what's the big deal here? Well, ultimately, if you're a first-time homebuyer, you're someone looking to get in the market in a legitimate way, this is not a level playing field. You're basically working with people that will allow this to happen, and ultimately this obviously helps perpetuate higher home prices already in a market that we're finding more challenging as developers aren't building. The cost of mortgages, the affordability crisis. I mean, as Canadians want to purchase a home, they're looking through, any option possible. I mean, they're putting common sense in the back pocket and they're saying, hey, I just want to get into a home so bad that I don't even care what the risk is. And that is a very big problem, not only for the banks, not only for the real estate market, for homeowners who own homes. I mean, this is a big problem. Now, as mentioned, we understand that fraud is happening across the board, and this is bad enough as it is. CRA is ultimately trying right now with the government to officiate a program where they can sort of communicate and talk to each other about verifying the income docs. But this less sophisticated way of committing fraud, this down payment, this lying about gifted funds, is a little bit harder to track. And there are a few different ways that they can actually approach this, because in a mortgage with major banks, your top 5, most broker-friendly banks, they will not allow secondary financing. So how is this happening, right? Well, it's very simple. I mean, you could actually have systems in play that will actually do a title search. I mean, most banks have the ability to search a title of a property. Now, yes, once the property closes, most banks don't go back and audit and say, hey, wait a minute, is this property, being rented out? Is this property is there a second mortgage being placed on it that flies in the face of our commitment? And this is where the question comes in. Do the banks actually want to do that? Are they putting that in there? Because the bank actually has the right, if you think about it, the bank has the right to call that loan immediately. If they find out that something happened, they can cancel the file, or if it closes, they can say, hey, you need to pay us back this money right away and go figure it out. And I think this is, number one, what needs to happen. I really think that the banks need to start making examples of people and clients that are committing this fraud. I really think if they find out that you have committed fraud, why are they not going after these people and saying, hey, we found out you need to sell your home, we want our money back, or go figure out your financing somewhere else, and down the road, you'll have to figure out your own finances, especially with private mortgages. Now, why am I saying that? Because this was a private mortgage. They registered the first, they registered the second was a private. How does private arrange their mortgage depending on the loan to value, the cost? I can't even begin to fathom what these clients were paying just to get into home. Is it worth the cost? I don't know, right? Because FSRA doesn't really publish this data, but we look at clients day to day and they're buying legitimately, and you're looking at the payments and the clients are literally already struggling. Imagine having to struggle, then on top of it, add in this secondary private financing. Wow, it could just get expensive. And plus the fees, the lawyers, you need 2 lawyers, which is very interesting because you'll need 2 lawyers to get this done. I mean, the first position mortgage has to get done with the broker and the lawyer and the bank, whatever the case is, in order to administer that mortgage. So the lawyer has, in this particular case, the fiduciary duty to act for both the buyer and the lender, right? So they're reporting back to the bank. They have to complete the documentation. So this person that after the deal closes has to get the second mortgage put on the property, they can't go back to the same lawyer, right? I mean, because that lawyer would have the technical responsibility to report to the lender saying, hey, we're putting a second mortgage against this property. The bank will come back saying, no, it's not allowed, you can't do it, and boom, the client has to go. Or they have to go to a second lawyer that's not telling the bank, they're just doing it through the title registration, but the lawyer themselves would have the existing charge for the first mortgage or know that there's a charge there and sort of say, hey, wait a minute, this charge was just put on 2 weeks ago, 3 weeks ago. What's the situation here? And why don't the lenders have a communication system with title registration? I mean, let me know what you think in the comment section. Is this something that we possibly, because the reason why I say that, and maybe I'm talking out of left field here, but when you have a mortgage, and let's say, for example, you have insurance, your home insurance, fire and theft, or whatever the case is, your home insurance plan, there is a notification that goes to your lender. And that lender obviously needs to know that you have insurance on your property. Otherwise, they could call the loan, right? If you don't make payments on your insurance, something happens, guess what? Who's stuck holding the bag here? So when there's a change of insurance or lapse of payment or anything like that, the lender gets notified so that they can sort of know that, hey, the insurance is still in place and we're good. Why don't we have something like this happening when it comes to secondary mortgages? This is an easy way to fix this problem. Now, ultimately, there's other implications of this for clients that may need a second mortgage legitimately down the road, who have financial burdens or stress, and they need to take out equity from their home. But ultimately, in these particular scenarios, the bank can actually do the due diligence and say, hey, wait a minute, this was just done recently. This is a false application. This is not something that happened down the road where the client's in distress and we need to get that secondary findings. I mean, let us know what you think. And ultimately, the last and final thing is the criminality part of it. So unfortunately, I do wish that these people get charged criminally. I think that would be a big deterrent if you were to be caught committing fraud, that you actually get charged with a federal or a provincial, criminal charge. You actually may have to do time, not a $110,000 fine. I mean, that's a slap on the wrist for this particular brokerage of that magnitude with the amount of business that they did. And, that is another problem, because that would be a big deterrent to say, look, if you commit fraud, you could actually do time. You could actually get charged criminally. That could impact your future in employment. I mean, and ultimately, are some of these brokers, because yes, the principal broker who should be managing the brokerage, watching over what transactions get filtered through, has to be responsible as well. But maybe these agents, these hundreds of agents that were working for this brokerage, they may have only been part-timers. Like, we don't know this because Fizzer doesn't publish the scenarios. But, someone who has another job that they're working in and is just trying to make an extra buck, they're not really concerned with, the longevity of this part-time job. They're just in and out. And that's a problem, because unfortunately clients will go to these people. And I mean, listen, nothing against someone who's starting up on the ranks, but understanding that, you should be working with someone who's full-time, someone who's been doing it for quite some time, because who you work with does matter. So ultimately, there's another problem there, part-timers versus full-timers, how long they've been doing it. Then the other thing is the lawyers, ultimately what happens here, should they be, investigated? Who knows? I mean, it's not the lawyer's fault. They're going to say, no, we have to follow our, law society. This is the case, so on and so forth. But there could be some internal documentation, obviously some message conveyed to them to sort of say, hey, if you see this, report it, right? Like, and ultimately we get it. Everybody's looking to make a quick buck, unfortunately. But at what cost? This is the idea. What cost? Because if you make it a deterrent, then people will not do it. If you give them a slap on the wrist, they'll figure out another way to make money. They'll figure out another way. The barrier to entry for most of these industries, most mortgage brokers, unfortunately, needs to change. It needs to be a lot harder to get your license, and you have to be committed to this, because these people that do these things, unfortunately, really give a bad rap to those who actually care and do things the right way to help their clients. But the last and final thing I'll leave is that I believe the clients also should be culpable in this situation, because of the fact that they had to move this money around. They knew what was going on. They themselves were involved in this fraud. It's not just the broker in some cases where there's plausible deniability. It's not like that. This case, the parents would have had to know. They would have had to sign that gift letter. They know that there's money coming back. So I really think if the banks called those mortgages and really made an example of clients that were willing to commit fraud, obviously intentionally, they can prove it, then they should call back those mortgages. And that will help many Canadians basically realize, hey, this is not worth it, because I could lose my house. They could call my mortgage. I'm already knee deep in this house. I have no options. So, either I buy, I don't buy, but I understand the repercussions. I'm not going to lose my house, because someone's telling these clients that, hey, it's not a big deal. The bank won't call your mortgage. And the bank should be calling those mortgages to prove that they actually mean business. But once again, do they want to actually make these moves? Do they want to make these changes? Let us know what you think in the comment section below, but we'll leave the video here. Wishing everyone a wonderful Friday and an even better weekend ahead. Don't forget to subscribe, and we'll see you next week.